Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite significant historical monthly support and demand area. From here, in fact, all this previous rejection to the upside was created. Again, here the market tested its zone and rejected it to the upside, again here and again here. And what we can see is that right now, the market seems to be approaching once again this exact same demand and support zone. So there is a good probability of seeing first a test of the area and then a potential rejection to the upside. So here in the monthly, on the short-term perspective, there is a possibility of seeing a bit more bearish price action, but then afterwards, there is a good probability of seeing yet another rejection to the upside away from this historical monthly support and demand area. Let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, what we can notice is that in creating this push to the downside, the market has also created an M pattern. And in general, after the creation of an M pattern, what you would naturally expect is for the market to create a potential rejection higher, for the market to go and complete the M pattern at the neckline. So at the previous support turned resistance from a weekly standpoint. However, this M pattern has just gone below its neckline, so there is still the possibility of seeing a bit more bearish price action, which in this case would also go and test that monthly support. And then at that point, in my opinion, there is an increased probability of seeing a potential rejection to the upside, completing the M pattern at the neckline. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, we can notice how we had already a series of impulses and corrections, creating lower lows and lower highs. Now we just had yet another daily lower low. So there is a possibility of this impulse phase to extend a bit lower. And if that would be the case, if this impulse phase would extend a bit longer, that would, as we just said, tap into that historical monthly support and demand, which at that point could further increase the probability of seeing institutional longing, which could further increase the probabilities of a potential rejection to the upside away from this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we look at the data precisely for the AUD, the first thing that we have to keep in mind is that if we're looking at the data for the AUD, we're actually already looking at AUDUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, we have seen an increase of the net positions. Precisely, we went from 19k to 26.6k net positions, with institutions on AUDUSD adding 3.4k longs and closing 4,900 shorts. So this starts to show how institutions are now moving back to the bullish side for AUDUSD, therefore making it stronger. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, in a situation like this, if the market will continue lower and institutions will continue to long, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes. So 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline that definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the CO2 data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.